the non-IT part? What about BFSI, for example? What about the tech-led consumer tech businesses which made their advent in 2020 with much fanfare and currently are seeing fairly dark days, so to say?
Yes. So Neeraj, what it looks like essentially that the BFSI space is anyway owned in the sense that we all have exposures to the BFSI space, be it some of the banks, be it the AMCs or the life insurance or general insurance companies. Of course, we already own a basket of these, just that we don't have a disproportionately high weightage to them. But we still own them, and I think they remain, and they are nice, good structural growth opportunities. Maybe they will keep growing, in double digits, maybe for the next 5, 10, 15 years. So I think the conventional consumer and the conventional BFSI are anyway part of our core long-term holdings. On an incremental basis, some of these tech-driven or digital-driven consumer businesses have started to look very interesting. Honestly, I think, the kind of price shave-off that we have seen, our view is that a lot of the excesses which were there in terms of their valuations have essentially, in a way, smoothened out. And a lot of businesses there are now making phenomenal sense. And so we're getting very, very constructive out there. And the call you have to take, for example, is that, in that space, one of our most recent investment essentially is PP FinTech, which essentially Policy Bazaar. And what we are saying is, rather than bet on a manufacturer of insurance, you probably bet on essentially a distributor of insurance. You can pretty much get agnostic. For example, you've seen the price getting shaved off by almost 2/3 now. And it continues to essentially be the leader in that space. Insurance itself is a very large category, usually underpenetrated. Maybe it has a runway of growth for maybe the next 2 decades or so, insurance as a space. Now, within that, you probably take a call that you probably want to now make incremental investments around a distributor or a seller of insurance versus a manufacturer of insurance. So I think in that context, some of these businesses truly are going to last and make difference and are probably going to define the years ahead. So that looks very, very interesting. Just then, Neeraj, in the very short term, their stock prices are still going to be hugely correlated with how the US markets behave, how the NASDAQ behaves, and all of that. And there might be still disconnect between essentially the stock prices as they keep falling. But the underlying value of the business probably will keep expanding because these are businesses which are growing at 30-40%. Okay. And so again, this is a classic one case where the businesses will grow, prices will fall, and therefore that lag between the market and the business will be there. So it's not just for the economy in general, but there are these pockets of the economy where I see all these things happening. But nevertheless, that creates an opportunity for a long-term investor.